Matt the Mortgage Guy here. I wanted to make a quick video because this new guideline that came out in mortgage on June 11th, 2020 has impacted self-employed borrowers quite a bit. Now later on, I'm probably going to make a more in-depth video talking about all the guideline changes, all the stuff that's in the selling guide from Fannie Mae that really goes into detail on all kinds of different stuff that has changed due to COVID-19 in the lending world. But for this video, I want to keep it really simple. I want to talk about self-employed borrowers and a guideline that has really thrown a monkey wrench in some of these deals. Before I do that, if you enjoyed this video, you want to see other mortgage videos, please smash the like button. Please subscribe. I just try to put out good mortgage educational videos, keep them super simple, and I'm not going to use fancy mortgage terms to sound smart. I'm just going to try to explain it simply so that people can understand and be educated, know more about the mortgage and the mortgage process. So with that being said, self-employed borrowers as of June 11th, keep in mind this is a temporary guideline. This isn't going to be there forever, but it is a federal guideline. So any lender that's selling to Fannie and Freddie is going to have to abide by these guidelines. It's not lender specific. If you're self-employed, because so many self-employed borrowers were affected by COVID, what lenders are saying, what the guidelines state, for self-employed borrowers, you are going to have to provide a 2020 P&L, profit and loss, and 2 months bank statements from that business. And what they want to see is how your business has been affected. There's no better way to see how it's been affected in 2020 than to get a profit and loss that's year to date and the last 2 months of bank statements. Now, in the past, they saw 2018, 2019 tax returns, they were good. Some lenders said, give me a year to date P&L and you can handwrite it. We just want to know that you're still on track to make what you made in these past years filing tax returns. But now, they actually want a P&L that's going to match the bank accounts. Now, what do I mean by match? If your profit and loss statement says through 6 months, my business has made $36,000. It's making $6,000 a month, but your bank statements have more outgo than deposits, have more withdrawals than deposits. That's not matching what you're putting down on a profit and loss. So what happens next, and what the guidelines say, is that if your self-prepared P&L and the bank statements don't suffice, don't make the underwriter feel warm and fuzzy that the business is still operating and operating on pace to do what you did last year, they're going to ask for an audited P&L. And I'll be quite honest, an audited P&L has got to come from a CPA. The CPA is going to charge you for it. The CPA, depending on the time of year, right now when taxes are due soon, they're not going to be able to turn these things around very quick, but it's a big deal. It's causing self-employed borrowers I work with some headache and some issue with getting their loans approved. I'll be completely honest. So that's the gist of it. 2 months business bank statements along with your self-prepared P&L. If that doesn't work, if the underwriter doesn't say, okay, I feel good about this, they're going to ask for the audited P&L. All self-employed borrowers. So be prepared for that. If you're self-employed, or if you're a realtor working with somebody who's self-employed, that's the kind of stuff you're going to be dealing with for at least the foreseeable future. Who knows? Maybe mid-August, September, things get back to normal. Lenders aren't as worried. This might fall off. Hopefully sooner rather than later. Any questions at all, please feel free to reach out. Matt the Mortgage Guy. Until next time.